Hey people, thank you for stopping by Building Wealth with Rajiv. Sea Limited. Till last year, everybody talked about this company. They flaunted their gains, called it a beast, including me. And now the stock price is about 70 to 80% down from its high. What went wrong? Is it the stock price or are these company fundamentals? Is it investable? Is it ready for the recession? What impact can recession have on the company and its fundamentals? I talked to two experts, Kris and Bertrand. Kris is bullish on Sea Limited. Bertrand likes Sea Limited, but has a conservative view on it. Now, the interview is a bit long. There are three people talking about the company from various perspectives, and all these three people have put their hard-earned money in the company. If you hear the whole interview, it's worth the gold. If you don't have time, I put the timestamps below. Take a look at it and choose the topic you like. Now, once you hear it, please do comment what you think about the company, what you think about the interview. Do follow my channel. Please tell your friends to subscribe to my channel. That will be very kind of you. Thank you.
Well, it's a pleasure to be here. Thank you, Rajiv, for inviting us.
Yeah.
Thank you for that, Rajiv. It's awesome. It's awesome. It's going to be fun.
Yeah, it's good. It's going to be fun because Sea Limited, I looked at the share price today, 67% year-to-date decline. So much wealth lost in a stock. What happened? Something went wrong, Kris, Bertrand? What really happened?
The market changed. That's it. Basically, the environment has changed, of course. We have seen very high inflation. We have seen, the interest rate hikes following that, and more to come. And the market always looks forward, so it's already pricing in recession, I think, or at least a part of the risk of recession. You can debate on how much is priced in there, but I don't think that I'm completely, surprising someone if I say that the market is expecting some sort of recession here and is pricing that in. And especially growth stocks have been hammered. I think if you look at Sea Limited from the top, it's even probably 80%, somewhere like that. Now, I started investing in Sea Limited more than 2 years ago in April 2020 at $54. And I have followed up the company, very closely. And I think that, for me, value has not been destructed or so. The stock price has moved up and down.
Yeah. So, Bertrand, what happened? Why didn't you buy? Kris is so bullish on the company, and you're into app economy. And what happened to you? Why didn't you buy the company earlier?
Yeah, no, that's a great question, Rajiv. So yes, basically, I write about the app economy. So you would think I would have been an early investor in Sea Limited. What's been happening is that while Sea Limited checks most of the boxes I look for in terms of surfing secular trends, targeting a marketplace business and really having a leader position in several markets. So I love all of that. One of the challenges was for me to be on board with the negative gross margin at the time, which, anybody can sell a $1 bill for 90 cents. So that was still, I believe, a mistake for me to look at it as a reason to stay on the sidelines, because we know at this point that the business has managed to actually succeed on this front, and gross margin has improved in the past 2 years. So I've gotten comfortable with the idea of investing in Sea Limited throughout 2021, when I saw not only gross margin improving on the e-commerce side, Garena, the video game segment, really crushing it with one of the most grossing game in the world. And so if you guys remember, there was a 40-50% sell-off late in 2021. That's when I felt comfortable with all these other aspects to start a very small position. And later on, we've seen a big announcement in February with Tencent announcing that they would reduce their stake from 21% to 19%. But here's the thing. At the time, the market reacted very negatively. There was like a 20% sell-off on the stock just on this news. So to me, that didn't really make sense, because clearly in the PR, in the press release, they said that the relationship between Tencent and Sea Ltd would not change. So you have no reason to panic, basically, but still the stock selling off 20%, to me, that's usually a reason to buy. So I felt comfortable adding a little bit to my position at the time. But later on, we've had another earnings report, the Q1 FY22 earnings report that had, I'm sure we're going to talk about it today. I had some good, some bad things. So I've been late to the party, starting my position only in 2022. That would make a lot of long-term Sea investors smile. And at the same time, right now, I'm kind of on a hold position where I'm really eager to see more from the company, in the coming quarters before I consider adding to my position. And we can go into the details today of why that is.
So I think I just want to pick your brains. You see, there's a different point of view, and that's what makes the market. Kris, this stock went up to, or company went up to 350s US dollar, right? 350, 345. Now, at that price, did you find it expensive? I mean, do you see that something has changed for you in terms of, 357 versus 75 now?
Well, what has changed the most, of course, is that we're not in Corona anymore. And that means that people have less time to play games. And that has had quite an effect on Garena, the cash cow of Sea Ltd. And so, yeah, I think if you look at the contexts back then, it was not crazily expensive. If you look back with what we know now, from the moment that context changed, I think it made sense that the stock went down as well. So, it's always easy to look back and to say, oh, it was crazily overvalued. But people, forget the context back then. I mean, this was the first time that we had such, in a modern times, at least, such a pandemic. And nobody knew what was going to happen next and how fast we would go back to a normal world and what would be, what would remain the same as during the lockdowns or what would change, et cetera, et cetera. So we haven't had a normal year on the stock market for years now. And I think that, it makes sense in a way that Sea has sold off. It also, you can also wonder if it makes sense that it drops so much. Like you can wonder if it made sense that it went up so much. That's always the the eternal question of where you are right now is always much more to judge than looking back, because then you have all the information already. I think at the time it was not, if Garena would have continued like it did at the time, I think it would have, made perfect sense that Sea Ltd would have stayed, I'm not saying, 350 or so, but at a quite high price level. So, circumstances change, and then, the stock market always violently reacts to those changes, because it always looks like it's always like conditions will never change. It always acts like the virus will remain for the rest of our lives. And now it reacts the other way. It reacts as if nobody is ever going to play a game again. So you have to see both sides of the spectrum there, and zoom out and look at it from from high up, and then you see that it didn't make sense. It wouldn't make sense if the stock price would be at that level right now, because Garena's revenue has come down, and it's cash cow. It's what makes the other divisions of the companies run. It's the oil that feeds the machine.
But Bertrand, what were you thinking when it was 357 or 350s or 340s? I'm sure this was in your radar list. What were you thinking? I think Kris was convinced about the valuations. Look, guys, I mean, I'm not trying to create a fight here, but I just want to know a little bit, like 340. Kris was comfortable with Garena outlook, COVID, and You won't probably, Bertrand, won't you? I mean, you're in a different
Yeah,
market.
it's basically because I started noticing C's potential improve dramatically, at least from my screens, my filters, with the gross margin improving, with Garena crushing it. So I started feeling like, okay, I can get behind this idea. I kind of want it in my portfolio. But at the time, to your point, the valuation was so high that I didn't feel comfortable with that. So that's why I eventually entered quite late, after that 40, 50% sell-off, because there was a mix of, the prospects are dramatically improving for the company, but the market is really recognizing it. So this is a situation where you could call it a stock running away from you a little bit, right?
Okay.
So that's why I've waited for that. But also, and I completely agree with Kris, the gaming aspect is really a big conundrum right now, because, and I've been working in gaming for the past 12 years. You wouldn't believe the amount of times through COVID I had to tell my leadership, and I was in charge of forecasting, right? I was literally the guy who says, this is how much sales we're going to make next month. And you wouldn't believe the number of times I've been wrong, because I kept warning that things were bound to normalize, as trying to be a financial planner here and trying to anticipate trends. But things did not normalize through 2020 and all the way through 2021. Things were up and to the right for gaming companies. And it was a very challenging thing to see, because it seemed like it was bound to normalize, but it kept going. And so we are at that point now. So, sometimes you're not wrong, you're just early. That's the way to see it. And I was definitely early there. It's not that people are not gonna game anymore. It's just that there are what I would call three headwinds at the same time right now, which is, for one thing, the post-COVID normalization. So of course we have really tough comps. That's one thing, right? The second one is Free Fire, because not only is Free Fire bound to normalize, even if it kept the same, let's say, grossing ranks, you would think, okay, the overall market, Nielsen and PD, they've pointed out that gaming is like 20% down year over year. So that would already be a negative aspect here. But with Free Fire, there is a double whammy here, because Free Fire has been really struggling, especially this current quarter. Analysts, they look at rankings, I certainly do. And so Free Fire was a top 15 grossing game across like many countries all the way through Q1, even at the time where things starting to get iffy, according to management team. But through April, May, June, it started to fall off. In the US, it was a 15 rating game. Now it's maybe 50. It's ebbs and flow, of course, it's on a daily basis. But clearly there is a Free Fire problem where the game is struggling a little bit with keeping people spending. And engagement is also a little bit down. So those are the two things. And then you have a third one, which is just the potential for an upcoming recession, right? It would be silly to set it aside and not to recognize it. So I actually had fun reading reports from Nielsen where they show that in a recession, people actually spend more time playing games. It was something like from 15 up to 18 hours per week. So that's a good thing, right? The problem is that while engagement is supposed to be up, and I imagine that's going to be the case, the revenue is not improving. It actually goes down during a recession. So if we assume, just probabilistically, that we are entering a phase where maybe, depending on the country, we have 2-3 quarters of a recession, this will be a third headwind on the gaming segment. And so when you think about Garena bringing, 3 billion of bookings expected, if things get a little worse than that, and with these three headwinds, you get to 2.5 or less, this is where it gets a little bit iffy for the other business lines, because what used to be a million in cash created, generated by Garena, maybe it becomes 800 million, maybe it becomes 500 million, because another thing that I'm sure you guys have noticed in the Q1 FY22 report is that the marketing efficiency is going down. Basically, you had, on the one hand, bookings falling 26% year over year. But in the meantime, management started spending more on marketing. It was sales and marketing on the Garena segment was up like 35%. So that's what you don't want to see, right? A falling sales with an increase in sales and marketing expenses. So the implication here is Garena is still a fantastic business, no doubt, because they start from an EBITDA margin north of 50, 60%. So there is no doubt that this is still a sound business. But as the margin profile worsens, not only you have a shortfall in revenue, but the adjusted EBITDA might take a bigger hit than the shortfall in revenue for the Garena segment because they need to spend more in sales and marketing to keep users coming and engaged. So that's a very challenging set of circumstances that could put a lid and even like worsen the Garena cash flow. And in the current context, then that means, and this is the biggest challenge for me right now, and I think this is the crust of why the stock is down. If Garena cannot fund sustainably the other segments, and you have, let's say they are using $500 million, $1 billion of negative free cash flow every quarter, like they just did in Q1, that's where, even though they have a fantastic net cash position on their balance sheet, something, if you count for long-term investment, they have basically a 5 billion net cash. So you would think that's quite a lot of runway. But if they stay the way they are right now, and again, we just pointed out in a recession, things could worsen, maybe they need to raise money a year from now to stay afloat and not becoming in a net debt position.
That doesn't sound a good situation at all.
I just want to add a few things there. First and for all, I mean, of course, I was in a different situation. You say, oh, I was perfectly comfortable with the high prices. That's a bit of a stretch. I mean, it's a different situation. You know that, Rajiv, I started my Sea Ltd position at 54. It's a bit of a different situation, being comfortable keeping because you invest for the next 20 years than starting a position at 350. So that's the first remark I want to get. And the second remark I want to make is exactly to Bertrand's point about normalization. I mean, I think we have seen that not just in gaming, but in a lot of other COVID related stocks, let's say, or companies, that everybody thought it would normalize in an even way, which it didn't. I mean, the levels stayed very, 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 very high, and instead of decreasing slowly, then they dropped off a cliff. And I think that's completely different from what all companies had expected, that it would decrease in some sort of predictable way, more or less. And they thought it would start earlier, and it didn't. And then all of a sudden it dropped off a cliff. And I think you have seen that, with gaming, but you have also seen that in a company like, Teladoc or DocuSign, or you have so many others. They all, Fiverr, they all have the same thing. They say, this went way faster than we could ever have foreseen. And I think that the same has happened with Garena there.
So, but the situation, okay, let me just put this way. Bertrand, you talked about the company could be, raising in a situation that it needs more cash infusion, right? I mean, I'm not as experienced as you guys, but that doesn't sound a very good situation to me. So, are you adding to your positions, or I know you have a small position, but are you adding it? I know Kris is. Because I get Kris newsletters and follow him very closely, but are you adding, or what are you doing? You're waiting.
Yeah, so my takeaway from the last earnings was that I either, every 3 months for members, I rate a company a buy, sell, or hold based on the performance, because I get a new look on the momentum of the business and just where the performance is. So right now for my service, Sea Ltd is a hold. That means I'm not willing to add to my position, but I'm happy to write it out, and to see what's going on. And, I think we're so lucky, to just watch a business flourish and every 3 months reassess and be willing to add to a position or just to hold off. For me, when I have doubts about a position, just letting it be there and not adding to it, as you know, Rajiv, is something that will naturally make the position smaller if it underperforms, and I don't really worry about it. So I just, eagerly wait for the next quarter to reassess, and if things look better, I will be more than happy to add. The main challenge I see is that, if I try to position myself 10 years, 5 to 10 years from now, what is C looking like? If it failed, I think it's a liquidity challenge. If it failed, it's because the next 8 quarters, if really we enter a recession, nobody knows. So if we really enter a recessionary environment, and I look back at Mercado Libre back in 2008, that was a very big recession. As we all know, this was like a recession of the century. So the odds that the same thing happened again, I think Morgan Housel was joking about it on Twitter, saying a lot of people are assuming this is either the .com or the Great Recession, nothing short of that. It might not be the case, it might be a mild recession, right? But if the same happens to C as it did to Mercado Libre, e-commerce and fintech back in 2008-9, basically you had a free fall of revenue growth from mid-70s down to 20%. So still growing, right? But just a big attrition of the growth rates. So you would think that's not a big deal, right? But if you have a mix of these two things, meaning the attrition of the growth rate on the e-commerce and fintech, meaning they are losing even more, and they're in a segment that fails to fund those segments, then that's where it would, over 8, 12 quarters, who knows how long it might last, then that's where the liquidity challenge comes into play. But if they can pass through that, and again, we reassess every quarter, if they can go through this period unscathed, then I feel like the odds are so great in terms of the uncapped upward potential, being a market list leader in emerging markets that have, the wind in their back. Those are things that you suddenly feel like the chance that this business fails, if it survives these few quarters, is quite high. It's in a great position to succeed if it didn't fail at the time. The odds were really against it, right? So because we are in a near-term unknown right now, that means I'm not willing to add, meaning I potentially miss on a bottom, because that will appear as a bottom in retrospect. But we have to also consider the other opportunities we have right now out there that are, much cheaper stocks, for which you don't have that big question of the liquidity crisis. So it comes down also to where you want to allocate your capital. I know it's a longer answer maybe than you thought.
No, I think it's a good answer. But Kris, you clearly, I kind of see what you're buying. I think you did not add Sea Ltd, I think a couple of days ago, but you said that possibly you could have added to that. But what I'm saying, I clearly know that you don't share the same view as Bertrand in terms of.
Well, no. It's not that I have a completely different opinion. It's just that I look at what management says and does, and they have immediately, or Forrest Li has said, this really reminds me actually of Amazon in the .com bust. A lot of things. Management saying, "Oh, we're going for profitability right now because the market asked it, as soon as possible." Jeff Bezos said the same thing. It took him 2.5 years when he said that before Amazon became free cash flow positive. And that's something else very important that Amazon and C share as well, and that is that they have raised capital just before the crash, and that's extremely important. So C is Rajiv, I update in my newsletter about what C is doing, and they are cutting costs everywhere. They have gone out of France, they have gone out of Spain, they have raised prices for their sellers on Shopee. There was an average loss in their core markets of 15 cents per order. They raised prices there quite a lot, and I don't remember exactly, but I think on average it will be positive already. And I think they have that leverage because people are so dependent on it. They're the leader in every single market. in Southeast Asia, where they operate. So they overtook everyone, Lazada and Tokopedia and what have you. I'm just seeing that management. So it's not that I disagree with what Bertrand said. I just see that management takes on the problems immediately, and it's not just the way. It's not like they're dragging their feet to do it. They're really fast at doing it, and that's also what Forrest Li says, and what he has written in his birthday letter to the people working in his company, that we have to remain a small ship that can change very fast, and I really see that they're doing that, and that gives me confidence. It's not that I say you should overload your portfolio right now with only Sea Ltd. But I think that I see a lot of good developments recently, and they say, the market asks something else, we are doing something else right away, and that's almost literally what Forrest Li said on the conference call, and that's what I really like. I like management that is not entrenched in their ways of doing things. If the circumstances change, they adapt very, very, very quickly, and that's what I really like. So, and that's also the reason why I think, but we will have to see, and Garena plays an important role there. But I think that they will not have to raise money, not next year, maybe further down the road, 2-3 years, we'll have to see that. But with the changes that they have done, they could do much better on the profitability side. That if you look at the history of Sea Ltd, you see that they have always beaten on revenue, and they have practically always missed on
EPS
earnings. Yes,
earnings, yeah,
but not in the last quarter. They really beat on earnings per share quite a bit, and I think that probably, and that's of course something I really want to see as well. But I think they will continue those beats on earnings per share because they focus on it right now. They say that we're in a different, environment, so we have to act differently, and I think they're doing that.
So one thing, and again, I apologize if I'm wrong. Sea Ltd, the business model is not something which is highly unique. Tencent has gaming, and it's kind of a mix of a lot of things, right? You have e-commerce, you have gaming, Tencent plus Alibaba, whatever. What is one thing, Kris, you love about Sea Ltd? Is it execution?
Definitely, but I would say that their business model is unique.
Oh, you say that.
So
okay.
why? Because of course Tencent has done it, but Tencent is I wouldn't say nothing outside of China, because they have their gaming department, of course, but Tencent is a giant in China, but outside, in the Western world, Tencent doesn't mean that much. And Southeast Asia, a lot of Southeast Asian countries, and you probably know that better than I do, Rajiv, look with some suspicion to China as well, and they are much more willing to give their information to Sea Ltd than to a Chinese company. So I think in that way, I mean, what is unique? It's the combination of all the things there. And yes, execution. I mean, it's so incredible how this company has executed. I mean, Shopee was only started in 2015, and Lazada was the biggest player almost everywhere except in Indonesia, where Tokopedia was the leader, and they have overtaken them in all countries. In just in most countries in 3 or 4 years, some 5, and Indonesia last year, that was the last one. I mean, that's incredible. If you see at their Sea Money, how fast that is growing, and again, the same thing there. They were losing a lot of money there. If you look at the last quarter, that was so much better, and I think that shows how Forrest Li has created a culture, because he's not the leader who does everything himself. He has really outsourced. He doesn't lead Shopee, he leads Sea, and he has Chris Fang leading Shopee.
Yeah.
And Chris Fang is a great manager himself. And I think if it's often very difficult to pinpoint, this is a special sauce of this company, because it's mostly a combination of all things together that create that ecosystem that is unique. And I think that Sea Ltd has that.
No, I think, Bertrand, you've studied entrepreneurship, Bertrand, last time we talked. That experience, do you think the business model is unique? What's unique? What's unique for you, Bertrand, in Sea? I mean, Kris, obviously, business model is unique and execution is fantastic. We know execution has been amazing. I mean, I agree with that. Maybe but what do you think?
I agree with all the positive points that Kris just mentioned. I think what we chatted about before was how Forrest Li has a little bit of a Mark Zuckerberg move fast and break things kind of angle, where if you're gonna fail fast and move on to the next topic. So I really like that about them. I know Kris mentioned before, insisted on the fact that they use the word discipline, and I think he's right. The discipline they've shown, entering the French market pretty fast and realizing, okay, it's not working, let's get out. They did the same in Spain, right? That's really great to see, because the takeaway from that is, okay, whatever they're doing in Brazil, well, it's working there because they are still there and they are willing to spend the money. So, I like to think that he has a very much a gaming angle when he looks at the e-commerce side of things, which means he has an LTV in his mind, a lifetime value that he can get out of a user. Okay. And so he looks at the money spent right now, and he's willing to say, well, when I think about the long-term value that I'm going to get out of these users, I am willing to spend the money to acquire them. So assuming he knows what he's doing on that side, and I think he is, there is a bright future. We have evidence of this. So as bad as some items were in Q1 FY22, you had improvement in gross margin, improvement in operating margin compared to the previous year. So all those things tell me thesis intact, right? That those things are clearly where you want to insist. If they worsen in a different environment, that's where everything is going to unravel, in a way almost like Peloton style, where everything you thought was good turns out to be bad, and then it's really a vicious cycle. So we want to keep that in mind, because things can turn against you when you're trying to be very aggressive towards growth. And one aspect that is tough for all of us, I think, to manage right now is you look at Dan Springer at DocuSign, who was very confident in what they could do post-COVID. Turns out he was wrong, and I still think he's a great leader, right? But he couldn't really
was a great leader.
He was a great leader. So you look at someone like him who couldn't survive this period. I don't know that Forrest Li's position is at risk at all. What I'm saying is that no matter the confidence he has in what he can do in the next 4-8 quarters, he could be wrong, because like Gavin Baker said, there is no playbook right now. We are kind of like in a flying blind, trying to see what's going to happen. And so I know Kris, you're also an investor in Mercado Libre. We know that one of the risks with Mercado Libre on the fintech side of things is the non-performing loans, right? In emerging markets, they can get you north of 25%. So we all have to ask ourselves, what's going to happen if really, you have this phenomenon of just like increasing rates, the economy tanking, and those non-performing loans gets higher. Then, and again, Mercado Libre is a profitable company and has been through for a long time. Here, the playbook of Forrest Li is, I'm willing to lose that money. I'm willing to have cash flow negative margins for a while, because I know that there is light at the end of the tunnel. But what if the environment doesn't allow this? We don't know, because ever since he's embraced this strategy, again, to your point, Kris, Shopee existing since 2015, maybe in this upcoming environment or the current environment, it's going to prove to be a lot more challenging than we would like. So those are things I consider. And we can refer to Amazon, we can refer to many other companies that had this playbook of losing money today to make money later. And I totally get that. I'm a SaaS investor, and there is like a good chunk, maybe 30% of my portfolio, which is an unprofitable company. That's not a bad word for me. I think it's okay to reinvest in growth and to think long term. That's actually what I want to see. My point here is Mercado Libre was a profitable company when it was making 100 million in revenue. Okay, so they did not have the playbook that Forrest Li is having with Shopee and Sea Money. Right? And Mercado Libre was growing at 70% year over year when it was making 100 million in revenue. So that tells me that at least I want to be mindful that he's doing something really aggressive and he's built such a fantastic company. It's a behemoth, right? But he's doing it with a clear risk in terms of things need to go right on so many aspects that we want to bear that in mind. So when I look at Brazil, when I look at Southeast Asia, very confident those businesses are going to be on track. The question is, are they spreading themselves too thin by trying to be bigger than they already are? And could it cost them basically just the solvency of the business down the line? Again, it would have to be a lot of things going poorly.
So yeah, so I think that's an interesting point, Bertrand. And Kris, did you ever feel, look, when they went into India, I think I can tell you my maximum gain my portfolio is not as big as you guys, Kris and Bertrand, but when my gains were there, I had the highest gains on Sea. My average price was up 150 and it's went to 350. And every day I look and my blood will come out of my mouth. I mean, look, 100% gains, and now it's gone other side. But did you feel when they went to India, when that was the time I got very cautious on the company? Kris, you ever felt that they're even now are they kind of going very thin, going everywhere? They want to do everything,
Well, I think again that's because capital was so cheap, and I think it made sense at the time. When they launched in Southeast Asia, they are very data driven. So they went into France, they went into Spain. They looked at the data and they said, no, this doesn't work. And they went out just after a few months. I have not seen this before. They're still in Poland in Europe and doing quite well there. My last newsletter, I shared that 34% of e-commerce shoppers have a Shopee account, so which is very impressive because they only entered that probably a year ago or so. So they're still, and so they remain in Poland, and they have data, and that's if you want to call a special source, that's one of their special sources, definitely, because they're a gaming company in origin, and that means that they also look at the data of Shopee in the same way. If there's no engagement, for example, in Poland, the average engagement was 27 minutes. You see that in Brazil as well, and in Southeast Asia. They're everywhere. They are the leader in engagement on the app, because they you can play games and you can get discounts if you win something, and etc., etc., etc. So they gamify shopping and for a part, and that's also something that, now, to come back to your question of spreading themselves too thin. Yes and no. I mean, again, Sea Ltd is decentralized, and I think that it's important to understand that. And when Kris Fang started in India, I thought, with Shopee, I thought it made sense because Garena or Free Fire was huge there, and that was also the entrance to Brazil, for example. So it definitely made sense. Now, of course, from the moment the government started working against
Chinese companies,
against Chinese companies, which is a bit strange because Sea is not a Chinese company, but there is some Tencent link. That's when it also made sense to so Free Fire was banned, and then they also withdrew Shopee from India, and that will that will save them, tens of billions over just the next few years, because it's such a huge market, and it's already quite. I wouldn't say it's saturated. It's not saturated, but it's
very competitive.
it's not
very difficult market.
It's a difficult market. It's competitive, indeed. So and you have Amazon there, and you have
a lot of domestic players.
Yep.
A lot of domestic
players. So I think they did the same thing again. Okay, well, Shopee or Free Fire is banned here. Okay, we're moving out with Shopee as well. And that kind of swift reaction gives confidence to me that over the long term they will do well, because as Bertrand say, once you look at the upside, it's huge. Now I want to come back to something else. The comparison with Mercado Libre is I think you can make that comparison, of course, but I think it's normal that Mercado Libre was profitable much earlier. Why? Because if you look at how fast Shopee has grown, I mean, if they would have taken the road of Mercado Libre, they would probably be where Mercado Libre was in maybe 2007 or so. So yeah, it's true that it was very aggressive, but it was also necessary to grow that aggressive and grab those markets. And they have succeeded there and became the leader in all Southeast Asia. So yeah, it's true. At the same time, their gross margins are fantastic. I mean, that they're about 40%, which is very, very high for a company that has so much revenue from e-commerce. If you look at Amazon, for example, that's an established company. Even if you include AWS, which is not a small part of Amazon, they get margins of about 14%, gross margins of about 14%, or 13, 14, something like that. C goes to 40%. So that's a huge difference. That's 3-4 times as high. So I mean that's also something, and of course again there are definitely things that could go wrong. And I think if Garena right now right now, then in the next earnings would go down again, and it probably will, because they have guided for it, but it would go down more than expected, the stock will get a hit again. But if you look at the long-term picture, I think you can see a lot of great opportunities still. Market is still growing extremely fast for Shopee. They have the leverage, of course. In Brazil, they now announced their loss per order for the first time in South America. And it was $2 and a bit, I think, there. So that shows how early they are there, and they will have to make sure that they don't lose too much money over there. But they have said they're already profitable with Shopee. I mean, then in Southeast Asia, in Malaysia, and what was it again?
Vietnam, Indonesia.
No, not
Thailand.
Thailand, could be Thailand. Yeah, maybe. Okay. I'm not sure. Okay. But there were 2 countries where they were already profitable and close to profitability.
Taiwan.
Yes, probably, but I'm not 100% sure.
It's Taiwan.
Is it Taiwan? Yeah, could be. So yeah, I mean, and they said that they would be profitable overall with Shopee in Southeast Asia at the end of this year. I mean, I have no doubts about them, reaching that goal. Of course, if there would be a recession, that would have some influence, and maybe it would be the first quarter of next year then, or the second quarter. But if you look at a very long-term perspective, like I always do, I think I think there's a lot of opportunity there, and it's really it's really working on stopping the huge losses. There will be losses. I mean, again, when I reference to Amazon, it took Jeff Bezos 2.5 years to turn Amazon free cash flow positive. But they never looked back, and then they have been a free cash flow machine since then. And I think that if I ever saw a company like Amazon, it's Sea Ltd. I mean, I know it's a cliche, but it's in the audacity. It's also in the execution. I mean, and switching so fast. It's Jeff Bezos has said the same thing. We succeed, and you see that, but we have failed 85 times before, and you didn't see that. And I think that if I, in all those years, and I know it sounds cheap, but in all those years, if someone reminds me of Amazon at the time, it is Sea Ltd. And it's the only one that I can see that comes close.
So I think, look, from my perspective, again, I don't know the company as much as you guys do. It's a very good case study of entrepreneurship. You have 3 businesses. There is an entrepreneur developing it. If you study the company, it's like a business school, if you ask me, how the person is scaling, failing, going into different markets, going into different verticals. So it's a pretty fascinating case study that. But now my question to both of you is, what is the near-term accelerator for the company? If, let's say, if an investor, I want to buy the stock, for example, if I think, what's the near-term accelerator? A year and a half, leave recession aside, but from the bottom of company, what's the accelerator for the company? So
the near term, I mean, if you talk about stock price, I'm not sure. I mean, I have no idea.
It depends. Leave the stock price. I'm talking about the business.
Yeah. So it will depend on the total market. That was the last thing I was going to say about that. If you look at the company, I think you will see what I have talked about a few times already, that they will be focusing on not losing that much money, so that they can go on for several more years without needing to raise extra money. That will be the focus, I think, and at the same time, they will continue to grow. I mean, the interesting thing about Sea is that they actually have 3 companies in 3 different stages. I mean, Garena is the cash cow. It's it's almost a mature company with more or less reliable free cash flow, and more or less, of course, now it gets hit now, of course. But nobody thinks that next year Garena will not be free cash flow positive, or so. That won't be the case. So they will generate cash. So the question is, how much cash will they generate? And that is up to debate, and that is difficult to see in your crystal ball. But I think that Garena will struggle indeed. They have been talking about other games in their pipeline for a while. I think that will be necessary. I think they will have to launch new games, totally new self-developed games. They did an acquisition of a gaming studio, probably a year and a half ago or so now. So they will develop internal games, and those will be necessary, because you see that Free Fire indeed is coming down, which is not abnormal after 5 years. It had been launched in 2017. So it has been a much longer success than everybody could anticipate. And it will remain more or less popular. It will it could have new additions, etc. So they can milk the formula. That's often how it goes in gaming. But I think, yeah, it would be good to see some initiatives there as well. So, but knowing Sea Ltd, it will be probably close to launch when you will hear something about it. And that's also typical for the company. They don't announce, they say, and if they do, they're already beta testing, open beta testing or so. So that's for Garena. For Shopee, I think you will continue to see the same thing. They will focus on profitability more, especially in the core markets, and then on reducing the losses in South America. And then you have Sea Money, of course, which is growing very fast as well, and could grow profitably very fast, actually. And if you see how fast that is growing, I think it will continue growing, probably in triple digits over the short term. It has a high potential to continue growing very fast over the long term. I think this is, like Mercado Pago for Mercado Libre. It has a long runway, and the integration with e-commerce is, very promising, especially in a market where so many people are unbanked or underbanked.
So I think it's a multitude of factors for you, Kris, as I understand, are the near-term catalysts. It's not just one factor. It's across all three, yeah. And
yeah, but if you have to name one theme, it will be focusing on earnings per share.
Earnings per share, the operating leverage is that, save money and get EBITDA positive and all this stuff. What do you think, Bertrand? What's your one thing? We don't need to go into so much detail. Just one thing.
Yeah, I generally agree with Kris's sentiment. I would go just even further and say eyes on cash flow, because that's really what's, Forrest Li has a bunch of call options. We just don't want him to get margin call. And so the way I'm going to be observing, the next couple of earnings is really how big is the damage on the gaming side. This would not be the first company, struggling over several years, despite, a big success at some point. One of my favorite companies on earth is called Supercell. This is the company behind Clash of Clans or Clash Royale. They were actually acquired by Tencent. They haven't grown for the past 7 years, right? 2015 was their peak at $2 billion in revenue, and they're still there, and they at some point dropped off all the way down to 1 billion. So if this happens to Garena, this could be really challenging for the business. So that's where my eyes go first, because that's the cash cow. And even if you look at Tencent's VAS, which is value-added services, so this is their gaming segment, it had no growth, right, in the Q1. So even though Tencent is the biggest mobile gaming publisher in the world, it is facing similar challenges, and their catalog may not be sufficient for Garena to keep having, these hit games coming in. Gaming is a tough business, so I keep that in mind. I really want to see if in a recessionary environment, those non-performing loan I was mentioning, it really showed in the G&A. So that bunch of bad debt, this will be an area to look at, because Forrest Li was confident at the time that Sea Money would turn cash flow positive at some point later in FY22, maybe at the end. We may enter a phase where there are promises is made that due to the macro environment, he cannot really hold up to. So that's going to be something to watch, I think, because then the story changes a little bit, and investors can punish that kind of stories. So those are the things I keep in mind. But I'm definitely, rooting for the company to succeed, hoping that Garena sees the light at some point, taper off, and find stability. And of course, the key aspect, gross margin of e-commerce going up into the right. If that doesn't happen, to me, the thesis is broken. So that's going to be something, of course, we look every quarter.
All right. And I just one thing, and I was talking to somebody here. Tencent has China to support, right? IBM or Microsoft had America to support. What government backing Sea Ltd has? Is that a regulatory risks? Who helps them? Is that a concern? Did you ever think about it? Could it be a risk factor?
Well, I think the integration with the Singaporean government is quite good, and we have seen that in India, for example. Singapore has pushed a lot there, to remove the ban. So India didn't move, but there was quite some pressure from Singapore, and I think Singapore is a financial center in the region. So I think that's a good thing. And I think, there are several things from which you can see that, there is a lot of backing from Singaporean government.
Okay, all right. Now, is there a key man risk here, Forrest Li? Do you think there is a key man risk?
Yes, of course, there's a key man risk because, he's the visionary guy, but also very practically, he won't be ousted like Dan Springer in DocuSign because he has, I think, about 59%, 60% of the voting power. So he will not vote himself out. Yeah, I mean, that's that's something that you can say about a lot of great companies. I mean, Amazon with Jeff Bezos for a very long time. We still have to see if he's really replaceable. Steve Jobs for a long time. I mean, again, of course, Apple has done well since he passed away, but at the same time, innovation is not the same anymore. Jensen Huang, Nvidia. I mean, you could call that a big risk as well, a key man risk, and several of the best investments ever have had that key man risk, definitely.
What do you think, Bertrand? Is it any different?
The risk always exists. I don't think that this is coming up anytime soon. It's very much hands-on right now. So that's not what keeps me up awake at night on this investment.
Okay, I think I have just two more questions before I wrap it up because I think we're widely short. Now, I think we talked about Meili and Sea Limited somewhere, right? And how do you see these companies together if you keep them, Kris and Bertrand? Which company do you, I know companies are different, but in terms of execution, in terms of which company you feel a sense of superiority, if you say, Sea versus Meili, if you need to pick one investment, how do you look at it? Difficult.
Well, I never like those those questions actually, because I always want both. I mean, and you don't have to choose because both are great companies, in my opinion.
Okay.
They have chosen another path, and I think it perfectly made sense for both in their context. I mean, and what at a certain level, I always have to think about Mercado Libre as well when I hear the doubts about Sea Ltd right now, because Mercado Libre had those doubts for a very, very long time as well. Oh, I mean, it's in Latin America, and it's the political situation is unstable there, and very high inflation, etc. And it's true. I mean, Argentina has seen 50% inflation since I think 2017 each year. So I mean, all those things are true, but at the same time, Mercado Libre has done great, and I think that shows, great companies when, when there are difficulties that they can overcome their difficulties and those difficulties, and I think that this is the chance for Sea Ltd to stand up as well, and like Bertrand said, in 2008, 2009, Mercado Libre had to stand up, and it did, in a way that they could survive while a lot of other companies couldn't. And I think that Sea Ltd will survive as well. And when they do, I think there will be even more of a leader, and have more confidence from investors. And yeah, I mean, this is a tough time. It can take probably 2 years or so. That's definitely possible. And yeah, I mean, I want to see management stepping up and you know, do what they have to do. And up to now, they I think they have you know, taken the right steps and communicated the right message, which is very important as well. Yeah, I mean, I'm quite confident that this is Sea Limited's exam, and that they will
pass and ace.
They have you know, they have the cards you know, to play a, you know, a good hand.
What do you think, Bertrand? I mean, I know your liquidity issues, and you know you have your doubts, and that's why it's a hold for you, which is fine.
I would say I agree with Kris on the sentiment that it's annoying to have to choose. So you know, I have almost 80 stocks in my portfolio. I don't choose. I actually like to own several businesses and to let them ride. That being said, in the current environment, I have to say I actually voted with my dollars. Like, I added to my Mercado Libre position not too long ago, a few weeks ago, and I would not add to my SE position today. So I guess I have an answer there for you, which is, as far as investing my own capital in this current environment, because everybody has an execution risk right now. Mm-hmm. Everybody is flying blind. And so because Sea Ltd has a potential bigger impact from execution risk on its cash flow and on the sustainability of the business, I would rather invest where I could see, even with 4 to 8 quarters of a big challenge of revenue growth attrition, margin attrition, I would rather focus on other investments, notably on the software infrastructure space. And so that gives, for now, it gives me pause with SE. It was already the case at the end of the last earnings report. So with the series of events that we've seen since then, from the Federal Reserve, from just the inflation keeping up, you know, staying up in the US, overall, that gives me pause, and that makes me want to allocate my capital to companies that are free cash flow positive, and that even with a setback will remain. So that would be my preference today. So I would go even beyond e-commerce, even beyond fintech, and just look at everything that's out there, because there is a lot of companies that are much cheaper than they used to be and that are still crushing it. And so, you know, we've also looked at Salesforce during the 2008 recession, and they tapered off as well, but they remained, you know, cash flow positive. So those are things that are top of mind for me, because as I invest, you know, I share it with many investors, part of the community, and I want everybody to feel really good about adding capital right now, and focus on where execution risk is a bit lower. But again, it's all about upside and downside risk, right? So you have to find a sweet spot for yourself.
I think both of you are very different, because I follow Kris very closely as well. I think he doesn't have 80 or 90 companies in his portfolio like Bertrand you have. So mm-hmm. I think he's slightly more concentrated than you. Last question before I just want you to imagine it's 2030. It's again very hypothetical question. And coming from where you are, Kris, and coming from Bertrand you are, in 2030, what is he looking like to you, Kris? Is it $1 trillion company? What is it? Just kind of let your imagination run based on what you know about the company, and say, okay, it's 2030, and you know, a C investor, how are you feeling about it?
Well, I mean, you ask, it's 2030, how does C look like? And I immediately think of the company, and you say, will it be a trillion market cap company? So that's a stock. Two different things for me.
Okay.
I mean, you know, will it be a $1 trillion company? I don't know. I mean, does it have the potential to become one? You know, I'm not saying 2030, but, you know, does it have that potential? I think so, yes. You know, a lot has to go right, but it's, you know, it's one of those few companies that, you know, really have that potential, because their markets are so big as well. Now, as for the company, I hope that Garena has become more diversified in its revenue streams. I mean, now they have other, so they're a publisher, especially of Tencent games, but not exclusively. And they are also, you know, they have their own Free Fire game, which is, you know, the biggest part of their Garena revenue. I hope that they have several, you know, of their own developed games at that moment. again, they bought a gaming studio, and I think the message was clear there. I hope that Shopee, will have followed the way of Amazon, Mercado Libre, and focused on on monetization more, which I think it definitely can. It has that leverage, especially in its core markets, Southeast Asia. I mean, being the leader is always a great position. And then Sea Money, I hope that Sea Money can become, what Mercado Pago has become for Mercado Libre, which is, I mean, if you look at, I have studied Mercado Pago, quite intensively. I focused on it, especially, and then looking back, when Sea Money started growing, and I see a lot of similarities there. Of course, that still has to play out. And as Bertrand said, we're in a different environment now. So I think, of course, Sea Ltd has also other branches. It has a VC arm, venture capital. About they invested 1 billion there, so it's not something to ignore. There's also SAIL, so Sea AI Labs, so that shows that they could be developing something with software, artificial intelligence, which I think they probably will use both for the gaming side and for Shopee as well. Maybe Shopee first. I think is probably easier than to integrate it into gaming, but Bertrand's the specialist there, so he can correct me. So there are different branches, and I hope they all develop, like I wish they will.
And Bertrand, do you have a view on 2030? Anything which comes to your mind? You see Sea Ltd, what it is? What does it look like to you?
I would say my expectation is that the gaming segment will be about the same size when I look at the way the growth of Activision, EA, Take-Two, the past decade, or just the way the cyclicality of gaming. And that's not the reason why I'm invested in SE to begin with. The gaming segment is a flywheel, but not the reason to invest. So if I try to project it, 8 years down the line, I think they're gonna have succeeded in many areas. Those will be the areas where they are thriving, and they will cut their losses everywhere else. So that's where I would expect that concentration of success to appear. I kind of want to use an example, and this is part of the beauty of investing, and a reason why I think the three of us love it too, which is I'm using one example, which is HubSpot. It's a marketing technology company in the US, a software company. I invested in the company in 2017. A year later, they released for the first time a CMS tool, and it became 2 years later the #1 CMS tool in the US. Today, HubSpot is one of my best performer, and in part for a reason that was impossible to foresee. When I invested, that was not part of my thesis. And that's important to appreciate, that when you invest in a company that has either a platform strategy or a lot of call options, I was suggesting, you end up like benefiting from luck, success, for reasons that you did not anticipate at the time. And that's really the beauty of a company that has Sea Ltd's profile, because they may succeed for something that was not discussed today in this call by 2030. And that's certainly what I hope for them. And really stacking the deck in your favor is what Forrest Li is doing. That's also why I've invested in the company and why I'm really excited about this leadership. So I like to think that the reason why they are so successful in 2030, if they are, is for something that was not discussed on this call. And if not, that will be this liquidity challenge that I'm referring to. And I think it could go both ways. The humility, that comes from accepting we really don't know, especially in this part of the world when you have cash flow negative margins. So really eager to watch the story though. That's really why I'm passionate about this. And I will be eager to, update every quarter and see how it unfolds.
Yeah, if you hear someone saying something with, very, very, very certain about investing, always distrust them.
That is so. Gentlemen, thank you so much. I hope in 2030 I'm alive and you're still my guest. We're discussing Sea Ltd, and I'm sure Kris must have made a lot of money and bought into your small portfolio. Kris,
you look very healthy, Rajiv.
So let's hope to chat whether this channel still exists in 2030 and we talk Sea Ltd and we learn some lessons and distribute the learnings again. So thank you, gentlemen. Appreciate your time and amazing stuff, guys. Thank you so much.
Bye.
Bye.
See you in 2030.
See you in 2030.